Well, I think almost certainly they should be. We in the West need to make some sort of response, but the initial sanctions we're talking about are very modest. They're on individuals. They're things like travel restrictions and asset freezes on individuals. That, of course, can expand in the future to things like cutting off all relationships between Russian banks and Western banks. That would have a severe impact on Russia. But
Mr.
already,
Ambassador, I'm sorry, go ahead.
Well, already in Russia, you see the stock market's in free fall, the ruble's in free fall, interest rates are up, capital's fleeing out of the country. The real question has to be, does Vladimir Putin care about any of this?
Exactly.
I think in the short run, the answer is probably not. Well, I don't think he wants to push this too much farther. He's made a huge gain in the short run in this move into Crimea, but at the same time, the situation overall in Ukraine is not necessarily favorable for him.
It's expected to pass.
This market is trading on fear, not panic, but fear. And that chart is an example of a fear. You could do the same chart with gold. Gold saw a 3% increase on the week, and that is just pure fear in the marketplace, and I don't think that goes away. As a matter of fact, Monday we're going to rattle our cage a little bit more with what the G7 is going to have to say in light of the Crimea response.
Right?
And you want to basically be prepared to add some money if there is a sell-off, Bill. We think next week we're going to get the industrial production, the lead economic indicators, the Philly Fed, and the Empire State Manufacturing, and the Fed two-day meeting. So there's a lot going on next week, which I think can offset any worries. And if you have some good numbers that show that this weather, as Janet Yellen has been saying, has been a big factor, that it was a factor, then you could be putting some money to work.
I would be a stock buyer, not a stock market buyer. I'd be very selective in what I'm adding based on what's going on. I'm hopeful that this is the correction that's going to give us the opportunity to buy the stock market and stocks at a better price, but that's yet to play out.
The first 2 months data is much weaker than the market consensus. Basically, I would say there's some seasonal effect, but more importantly, we think that it indicates that when the government is trying to push structural reform, but many of the structural reform, if we talk about cutting capacity and also deleveraging, they will have a near-term negative impact on economic growth. And so that's near-term pain is what we are seeing right now. Yeah, I think two main motivations behind the recent CNY depreciation. One is that in recent months we have observed very large capital inflow, and large capital inflow has caused the compromised domestic monetary policy operation, particularly that when the PBOC trying to crack down the speculative activity in the shadow banking and also trying to normalize the credit policy. So currency depreciation, one objective is to track down these speculative activities. And second is that, trying to provide some relief for the export sector.